Let's get into what is called the credit bureau business in Nigeria. It's been 10 years since we raised the curtain, as it were, on Nigeria's credit bureau, getting them to be part of the new credit market that is evolved in Nigeria's financial system. Yesterday, bit of a lecture on where were we and what do we need to do moving forward in terms of credit lending. The country manager for International Finance Corporation, Essie, has some new thinking and advice both for the private sector and for the government. Take a listen.
A new lending model. What would a new lending model be for Nigeria? So we all know that lending is an act between two willing parties. With the lender being willing to lend, mainly on the basis of confidence. Confidence that he or she has the operating environment and the supporting systems to operate sustainably. A lender needs to be confident that the system will assist with assessing and also pricing risk. That lender needs to be able to protect their rights and have a predictable and efficient manner of dealing with debtor default. The first step, therefore, to build confidence in the lending ecosystem is that building confidence. That is the first step. And the question for all of us should be, how do we do that? How do we build confidence across the financial system in Nigeria? What needs to happen so that both on the lending side and on the borrowing side, that confidence becomes even a critical part of decision making? Now, as we all know, confidence is not something you can buy. It's not something you can sell. You certainly can't see it. But think about that carefully. It is the absolute foundation of any effective lending system, something that we can't even put our hands on. So how do we do this? How do we build more confidence in the lending system in Nigeria? The confidence also comes from the borrower side as well. Borrowers have to be confident that lenders won't cheat them. They have to be confident that lenders won't take advantage of them. They have to be confident that lenders will live up to their fiduciary responsibilities. So it's a two-way street in order for this to work. In the absence of confidence, as you know, we have relied very much on collateral. It's a default for any economy, but it's been an extreme default in the Nigerian context. And we know that without sufficient information on borrowers, lenders will be completely unwilling to extend credit without collateral, and in some cases, quite restrictive collateral. And we also know that for most small businesses, this is beyond their reach. They're not able to provide that type of collateral. And that's why credit reporting is a part of the solution. It's a critical part of the solution. And I would argue it's a part of the foundation. It is the solution to the confidence question. Credit reporting becomes the solution to the confidence question, and it's critically important in Nigeria. And as you look at how credit reporting has evolved over the last 10 years, all of the obstacles that have been overcome to get to these types of numbers, I think we can be very proud of that development. That means that there is more confidence in the financial system in Nigeria. That I am sure of. But I do know that we have a lot more to do in order to get to even higher levels of financial inclusion. So again, yes, there has been progress. And yes, there is a lot more for us to do across all verticals of the financial system. From our perspective at IFC, we need to see more innovation. I was very pleased to hear the MD talk about the innovations that are coming from CRC, and I expect them to happen across the sector. When we met a couple of weeks ago, he actually showed me how the mobile app works. So I'm hoping all of you will download it and make use of it. We need to have things like this to respond to the needs of Nigerians. I would ask, though, that with that app, it needs to be able to iterate. It needs to be able to be an app that actually is responding to the needs of Nigerian borrowers. So if it's not responding on day one, it needs to be adapted so that people are starting to use it. So being able to adapt to the evolving needs of borrowers is a critical part of how the lending system needs to evolve. What the average borrower wanted 10 years ago is very different than what their expectations are today. And the financial system needs to innovate to make that happen. The financial system needs to adapt to make that happen. We think that when you integrate all of the economic actors in Nigeria into the financial system, and particularly those, again, who are unbanked and informal in the informal sector, we have the potential, again, to really boost the productivity of the economy across the board. So one is innovation. We need to see much more innovation in an evolving lending model for Nigeria. The second one, I would argue, is more of a legal issue. We need to see a speedier adjudication of commercial disputes. We all know that this is a challenge in the Nigerian environment. A prolonged and uncertain process for determining disputes and enforcing creditors' rights really has a chilling effect on investments and lending in particular. As an investor, IFC is a large investor in Nigeria. Nigeria is our largest country in Africa, and Nigeria is one of our top 10 exposures globally. This is a major concern for all of the companies that we do business with. So we need to see appropriate reforms in the laws and rules that are necessary, and also the supporting infrastructure, including electronic case management as an example. We need to see that be deployed in order to address this issue. A second and related one will be the introduction of specialized commercial and small claims courts, and they would have clear mandates to adjudicate commercial cases quickly. They must deal with them quickly. Business people need to move and get on with it, so they have to deal with them quickly. And they can do that at the same time, make sure that all of the angles of this are in alignment so that when borrowers come back or lenders come back for the appeal process, they have the right incentive to do so. We also see a need to develop and deploy more innovative lending structures, especially for the agricultural sector and rural dwellers in general. The majority of farm production in Nigeria is done by about 18 million farmers who produce very small quantities, mainly for subsistence, using very small plots of land. In order to break the perpetual vicious cycle of low productivity and low profitability, Nigerian financial institutions will have to use alternative repayment structures to reflect the seasonality and the uncertainty of working with some of these farmers. This is critical, and I can say that for the agri-sector in general, this has always been a challenge. But we do think that the Nigerian financial sector is well positioned to figure out how to do this, and it will take innovation to do it. I've been personally heartened to speak with a number of banking institutions here who are focused on the agricultural sector, who want to do more. They know that it's risky, they know that they need to develop their capacity to do it, they need to deepen their capacity, but they know that it's absolutely critical for the country. Now, these need to be complemented with insurance against climate-related disasters to help mitigate the risk and reduce the vulnerabilities of smallholder farmers, and also improve agricultural development. In particular, we've seen a lot of interest on the part of the insurance sector to develop micro-insurance products. And these would be designed to specifically address the needs of the informal economy. And again, I'm very pleased that a number of the insurance companies here are taking on this initiative. They're trying to figure out what types of products they can deploy that will actually be able to reach smallholder farmers in various parts of the country. Again, innovation there is critical. What is happening in Indonesia or even very close by in Ghana may not work in Nigeria. These have to be homegrown solutions that address the needs of Nigerians. And of course, you have the role of government. And when we think about what needs to happen here for a new lending model, we know that government needs to be a part of that stakeholder universe. We need to see government promoting, and we need to see businesses embracing more opportunities around the digital revolution. Now, this is something we're very excited about. Last week, we launched our Digital Economy for Africa diagnostic, and that demonstrates very keenly that the digital sector, what we call the digital economy, has a critical cross-cutting role for Nigeria, whether it's healthcare, agriculture, obviously the financial sector with fintech. Regardless of the sector, the opportunities are huge. And so we have captured that in this report. And what we hope to do is have, again, all of the stakeholders having a conversation about what we need to do to really push on the digital economy revolution in Nigeria and get people excited about it. The wonderful thing about that as well is it really does bring in the youth dimension. There are a number of youth that have, I call them youth because they're much younger than me, but they've started small companies, very dynamic, exciting things happening, and this is something we need to continue to support and partner. And I believe that CRC should be partnering with a number of these companies as well, given what they're doing. And of course, the critical thing, the underpinning dimension of evolving a new lending model for Nigeria will be things that are beyond us. These are the structural constraints, the macroeconomic fundamentals of the country. We know that there are plans in place to move that agenda forward. We need to see much more efficiency in the management of public finance. We need to see monetary stability. We need to see policies that will continue to support the private sector. But again, in a low growth environment, this is going to be very, very challenging. And maybe I would argue that because the prospect for GDP growth is so sobering for Nigeria, maybe that is in fact the impetus that is needed to really accelerate and deepen innovation. When Nigeria was charting 6%, 7% growth, when we look back at that period, we actually had increasing poverty. So we had high levels of growth in the country, but the poverty dimension was not improving at all. We had jobless growth in Nigeria for many years. Nigeria can no longer afford that. So perhaps having a low growth scenario over the next couple of years will incentivize people, will give people the impetus to really deepen their innovation thinking around what they can do to try and address this gap. So this is where the private sector and the public sector can, I think, have a very deep and abiding partnership. So as you can see, we already know what all the key elements are to have a sustainable and functional and effective lending model. And many of those elements are already here. It's true that in 10 years, there'll be innovations that are happening that we couldn't have thought of today, but we already have all the elements in Nigeria today. So what we want to see is embracing that and implementing and deepening what we already have in the system. And of course, innovation will continue to take the country forward. I happen to really like to embrace big and ambitious goals. Lifting 100 million Nigerians out of poverty in the next 10 years is certainly very, very ambitious. But we need a lofty goal because the statistics on poverty and on health and on education in Nigeria are very sobering. They are very troubling. We know that poverty, health, and education are linked. And if we don't address some of these issues, if the country doesn't address some of these issues, as development partners we can support, but if we don't see progress there, it's going to be very challenging going forward. So I like lofty goals because lofty goals give us something to look forward to. It gives us something to work towards collectively. But we know that this is only possible if the private sector, both formal and informal, we must not disregard the role of the informal economy in Nigeria. Both formal and informal, they play an incredibly important role to create jobs.
Essie, the country manager for International Finance Corporation in Nigeria, talking about a new lending model for Nigeria. So they're talking about credit history and Nigeria's credit bureau system. Well, that was a decade ago when it was unveiled under the administration of the central bank back then. But how far did we go? And if you pick it that back a little bit, beyond 10 years ago, how did we actually start the quest for what you called credit market information? This is what Tunde Lemon, former deputy governor of the central bank, had to say.
Prior to 1990, for most of us who have been in the industry for quite some time, Nigeria witnessed a surge in non-performing loan. Then that was the era of serial borrowers, people robbing Peter to pay Paul, as we used to say it then. And it was very convenient to borrow and then make the bank belly up and then migrate to another bank and then inflict injury in other places. You could just go up and down. There was no documentation and everybody was behaving the way they liked. It was not until 1990, in the days of President Babangida, during the presentation of his budget, when he then hinted on the need to set up a credit risk management system, which was followed by the promulgation of CBN Act number 24, 1991, sections 28 and 52 as amended, where, of course, regulation mandating financial institutions in the country to furnish the central bank with details of all credits in excess of 100,000 naira then, and as well as details on customers with outstanding aggregate debt profile of $1 million naira. The Act also required that banks scrutinize intending borrowers in order to determine their fitness to repay before extending credits to them. Ladies and gentlemen, this is the genesis of public credit reporting in Nigeria. Just a decade later, 2003 to be precise, the first private credit bureau operator made an entry into Nigeria and became operational following feasibility studies with deposit money banks and a letter of commendation from the CBN. Since intervention of the CBN in 2008 with the licensing and regulation of private credit bureau, credit reporting in Nigeria has become a pillar of the economy. Regulatory policies were formulated to increase financial inclusion in the economy, such as the microfinance credit policy and supervisory framework for Nigeria, which was launched in 2005 and revised in 2011.